Hello guys, so in this video I'll be looking at the last candlestick, which is the tweezer bottom and tweezer tops. Again, it also has its own conditions, 4 of them, and all have to be met. So let's go through the conditions. First one, it consists of 2 candlesticks. 1, 2, 1, 2. Both candlesticks are of the same length, meaning the bodies are of the same length. But then note, okay, we'll talk about this later. The third one, tweezer top. The tweezer top, the first candlestick is bullish. So the tweezer top, yes, the tweezer top, the first candlestick is bullish, followed by a bearish one. The tweezer bottom, the first candlestick is bearish, followed by a bullish one. So tweezer bottom, the first one has to be bearish. Tweezer top, the first one has to be bullish. Okay, so let's look at the psychology behind the formation of the tweezers top and tweezers bottom. What does it mean when they form at certain levels? What can we expect? What can we anticipate? What can we hope for? And what can we look forward to? So the first one, let's say it forms at the bottom of a trend, just like in this example. So when it forms at the bottom of a downtrend, it suggests a bullish reversal or a bullish momentum, meaning buyers are about to come in and reverse the market upward. When it forms, in contrary, when it forms at the top of a trend, it suggests a bearish reversal or a bearish momentum, meaning sellers are about to come in and take control. I'll explain this in more detail. When it forms another one, when it forms at the middle of a trend, it suggests a continuation of that trend, meaning when it forms at the middle of a downtrend, say this is a downtrend, and then it forms here, suggests that the market will continue pushing downwards. And if it forms at the middle of an uptrend, suggests that the market will continue pushing upward. It can also be used as a buy or a sell signal together with other confirmations, of course, at certain areas. It can also be used as an exit signal, and it is effective in the 1 hour all the way to the 4-hour time frames. So let me explain this concept. Like, I want you guys to understand why it reverses the market, why it continues, what exactly is happening here. So if you look here, who is in control here? Sellers, right? So we get this bearish movement, this bearish candlestick here, this one, the black one. Other than getting another one pushing the market all the way downwards, we do not. Rather, we get this bullish one, meaning this doesn't just happen here, guys. This happens when one side wins. It's either buyers win or sellers win. So when we get this bullish movement, it means that buyers won here. Therefore, that's why we start to get this, meaning more buyers starting to come into play now. That's what happens. So let's do some examples here. Let's do some examples. So I want you guys to identify tweezer bottom and which one is it? Is it a tweezer top or is it a tweezer bottom? So again, remember your conditions and know where to look. Conditions consist of 2 candlesticks. Both candlesticks are of the same length. Tweezer bottom, the first candlestick is bearish, followed by a bullish one. Remember? So you must know where to look, guys. The most important thing. At the top of a trend and also at the bottom of a trend. That's when you want to be looking for these patterns. So pause the video and see if you have identified them. So this is where I've identified mine. In this case, it's a tweezer bottom. Observe where the pattern occurs and which candlestick is first. The first one, as you can see, it is the bearish one. Therefore, tweezer bottom. So this is the zoomed figure, consists of two candlesticks. Both candlesticks are of the same length. Relatively, the market has errors, so sometimes we just have a fraction off, but then the market is not perfect. So I can understand that they are not necessarily of the same length, but then just the market, it won't be perfect, but you get the idea, right? And tweezer bottom, first candlestick is bullish, followed by the bearish one. The first one, but then in this case we have a tweezer bottom. The first one, it is bearish, followed by the bullish one. Okay, great. Let's observe what happens if we get this pattern. So in this case, we got it at the bottom of a trend, of a downtrend. Then we got it there, and then the market changed its direction. Good thing, good observation. What can you do with this information? You can enter a buy here and make profit all the way upward. This is just to do with technical analysis. And then let's do exercise number 2. Let's try to identify tweezer top here. So you must know a tweezer top. The top. Why is it a tweezer top? That means the first candlestick has to be bullish, making it a tweezer top. So you must know where to look. Know where to look. Okay, pause the video, try to identify and see if you guys have managed to identify it. And remember, guys, like the second condition, that they have to be of the same length. Sometimes there will just be a fraction, like an error, like just a small difference of the body, like they won't necessarily be of the same every time. Sometimes you'll get like they'll be off, but then doesn't really matter. So in this case, observe where the pattern occurs and which candlestick is first. Here it occurred at the top, and the first candlestick is bullish. Therefore, we get a tweezer top. Thus, we expect price to reverse and go down. Here's the zoomed figure. All conditions, check if they are met. Okay, the observation going up. We got it here, and market started to drop. Similarly, let's do another example there. Exercise here, identify the pattern from this chart. So from this chart, this exercise 3, I'm sorry. So from here, try to identify. Pause the video and see if you can. Think of the condition. It consists of two candlesticks. Both candlesticks are of the same length. Tweezer top. The tweezer top, the first candlestick is bullish. The tweezer bottom, the first candlestick is bearish. Okay. So from that chart, we have identified to be here. Here's the zoomed figure. And in this case, where does it occur? It occurred at the middle of a trend. As you can see, it's at the middle of this upward trend. And what did we say when it occurs at the middle of a trend? It's just it confirms a continuation in the upside. So if you were in a buy trade and this occur and you happen to spot this tweezer top here, this tweezer top, you have to relax and hope and expect price to continue pushing up, meaning you must not cut your winners short. Okay, the observation again, it occurred at the middle of a trend, an upward trend overall, and then the market just continue to push upward.